What is the quickest, most effective way to grow your account rapidly, especially when you have a small account that does not have hundreds of thousands of dollars in it? In today's video, we're going to be talking about options versus futures trading. What is going to be the best strategy for you as a trader, and what is the best way for you to preserve and capitalize on wealth creation through the stock market? Let's cover it all today on Young Money Investments. So one of the questions that I've gotten asked quite a bit lately, because I have been getting more into futures trading, is do you use options or should you trade futures? One of the big things is, obviously for most people, as you've gotten started on Robinhood, TD Ameritrade, E-Trade, or one of these other platforms, maybe even Webull or Charles Schwab, is options are one of the most prevalent things that you hear of. You know, options aren't too hard. You know, Robinhood, you can trade free options. But with that being said, there is something that I think more investors need to know about, and that is futures trading. I want to talk to you a little bit about what are the pros, what are some of the cons, and how you can, like I said, grow your account the best. So before we talk about options, it's important to understand what futures exactly are. Real briefly, some of the big benefits of futures are that you have 24-hour access to trade nearly 24 hours a day, 6 days a week. Other markets are closed, especially options. Options are literally only open from market open to market close. There's no after hours trading and there is no pre-market trading when you are trading an option. With futures, you have deep liquidity. More participation in a market means tighter pricing, lower costs, and tremendously more efficient trading. You also have transparency. You see the same prices, quotes, and trades as all other participants, fostering true price discovery. That is one of the problems when you are trading on a mobile platform such as Robinhood. There is slippage and a lot of those different things. That does not happen nearly as much when you are trading futures. Obviously, one of the big draws to both options and futures is leverage, right? The more leverage that you have, the more money that you can make, but that also does mean there is the potential for more loss. Basically, with more leverage, you can control a large contract value relatively small to the amount of margin that you have, and it gives you more quote-unquote capital to actually purchase a contract in the futures market. One of the other great things with futures is that you do have the ability to diversify. Options, you do have a lot of diversification when it comes to individual stocks. But with that said, the CME group is the home to several global benchmarks used to set prices worldwide. And what is CME? That stands for Chicago Mercantile Exchange. It is basically the hub for most futures trading. And one of the other major benefits that I have seen with futures trading is the ease of going long and short. Yes, you can buy put options. Yes, you can buy call options, but you do have something called delta decay, and that is time decay. Obviously, with more delta, you're going to experience more time decay and your options lose value, even if they're sitting flat, sitting still, not even changing price. With futures, you can go short as easily as you can go long, and you can do it many times in a day. That also brings up the important fact with futures is that you have no PDT rule, and that for me is probably one of the most important features when trading futures. One more thing as we get rolling in here, if you have not checked out the link down below for Young Money Investments private mentorship, please check that out down below. We are doing a lot in that group, and a lot of the members are seeing huge returns. They're doing very well, and it's super exciting for me to see that they are taking the knowledge that they are learning, making the trades on their own, and really embodying the idea of taking knowledge and turning it into power. There's also some free links. You can also check it out for a free short trial. Just check the link down below, and I'd love to see you in the private mentorship. You get a lot of my trades, how I'm doing things, what I'm seeing in the markets on a day-by-day, minute-by-minute basis. And so that is a super cool thing. Check that out down below, and we'll continue with the video. Now, with that being said about options versus futures trading, some of the other big benefits for futures over options are essentially going to be the fact that you do not have that decay in the overall asset value of that particular option that you're trading. While in the futures market, you are trading a contract similar to how you are trading an options contract. It is very different because the time decay, dividends, etc., are all baked into the overall price of that particular commodity that you are trading. The other thing that I find really beneficial in trading futures is that you do not need to focus on multiple charts. Yes, there are multiple markets and commodities in the futures market that you can actually trade. But with that being said, it's very simple and easy to focus on some of the most important markets, such as the ES or mini E's, which is trading based on the S&P 500. And if you're going, Cameron, how and why would I want to trade the mini E's, as you say? Well, as you can see right here, based on this chart, you can see that in agriculture alone, there is $35.1 billion traded on an average daily basis based on December 2019 values. Energy got about 106.7 billion. Equity index got about 522.5 billion. Forex, 99.5 billion. Interest rates, 4.6 1.2 trillion, metals 60 billion, broker tech is 625.7 billion, EBS is 56.9, and OTC clearing is $132.8 billion. And as it says right here, you can trade all major asset classes from one marketplace. You can explore products across 6 major market classes, find opportunities, and diversify your portfolio and capture efficiencies with a leading edge technology. So overall, what are the main reasons that I recommend going more with futures as opposed to trading options? Is simply for the ability to avoid the time decay that you see with an options contract. While most people don't mind that and find a way to get around that, I have found for most beginner investors, getting around that time decay is very, very difficult. What are some of the reasons that you are actually trading futures or options? What are some of the reasons that you've liked either particular asset class or market? What are the reasons that you're wanting to get into either futures or options trading? I'd love to know down below. Give me some of your information. I'd love to just know what you're thinking. It helps, and I think it helps those that watch this video either a day from now, a week from now, or several years from now to kind of understand as they are learning and growing as well. So it helps to be a part of this community and contribute just as much as you're learning and taking it. I'd really appreciate it. The second problem that happens most often than not is the gap down or gap up that happens in any markets based upon fluctuating market circumstances and geopolitical situations. As we've seen recently with the trade war between the US and China, and even more recently with the potential war between the US and Iran, the markets have fluctuated dramatically, and that would have affected the options price very drastically as well. While not everyone would agree with me, I would say that the writers of the options contracts usually are the ones that are in more of a favor than the actual buyers of the options contracts. And that's not to say that you can't write your own options, but really these people and the big banks and hedge funds that are writing these option contracts have specific and very thought out algorithms in order to manage risk, whereas most individual traders that are purchasing and buying and selling options usually do not have that kind of technology behind their trading strategy, and that's why most of the time they lose. Just like you don't go to the casino and bet it all on black every single day, and you usually should go for entertainment purposes, not for a living, that is kind of the same way that I look at options versus futures. Futures is more of that gambling opportunity, and I know I'm gonna get some people that are gonna say that's not true at all. Hey, that's just what I've seen as a general basis for most people. You could be the difference, you could be the 1 in 10 that I've seen that actually make it work. But overall, and that might be generous, but overall, I'm gonna say that futures tends to be a little bit more lucrative and a little bit more fixed because you can trade multiple hours a lot longer, and you can kind of deal with the volatility in the markets because you can trade those contracts a lot longer. I hope you found this video helpful and successful. If you did, please hit that like button down below. Please leave a comment down below as well. Like I said previously, what are some of your thoughts on the futures market? What have you seen so far? What are some of your reasons that you want to get into futures, or why are you in options right now? I'd love to know down below. Leave me a message and I would love to have a conversation down there with you. I'll catch you in the next video. Talk to you later. Bye.